Okay, so hi everyone. Thank you so much for joining us today. We would like to welcome you all to the third of the 7 expert panel discussion of TADS Awards, the world first tokenized asset and digitized securities awards. Today's topic will be on regulatory landscape. And we have another 4 sections after this one as shown on the screen that you can also sign up for, covering other key topics in the TADS sectors. Feel free to scan your QR code on the upper right corner to register if you have any questions, and please do not hesitate to reach out. Now I would like to give you a quick rundown of today's. Sam Lee, Chairman of Steering Committees of TADS Awards, founders and CEO of Constraint Partners. We'll start off with a quick introductions sessions on the TADS Award 2021. Followed by that, we will have our expert panel discussions. So with that said, let's give a warm virtual welcome to Sam Lee. Hello, Sam.
Hi, everyone. I'm Sam Lee, founder and CEO of Constraint Partners. It's a great pleasure to be here today to share with you some information about TADS Awards. So let me put up my screen. Okay, can you see my screen now?
Yes.
All right, great. Okay, so I'm going to share with you some information about TADS Awards. So TADS Awards is the world's first annual international awards for tokenized asset and digitalized security sector. It celebrates this industry by recognizing and honoring significant contributions and distinguished achievement worldwide. It brings together individuals and businesses to share the energy that tokenization brings to the financial sector. It's also nurture the growth of this specific industry by jointly establishing best practices and setting measuring standards for high quality tokenized asset and digitalized securities, and together with other industry leaders on the global markets. So we are very honored to have the second year of TADS Awards this year. TADS Awards was launched as the first year last year in 2020. This award have 2 awards category, as you can see on the screen. On the left-hand side is what we call the Best of Class TADS Awards. It goes to a different issuer of tokenized asset and digitalized securities. And on the right-hand side is what we call the Ecosystem Excellence Award category. It goes to different service provider and solution provider along the value chain. So last year we have great pleasure to have 10 very reputable winners in the industry, including, for example, on the left-hand side, the equity-backed token, MyBlock Capital is the first regulated crypto fund in Hong Kong. And in the ESG, SDG token, for example, Libra project is the first regulated security tokens project from ADGM in UAE, right? And also on the right-hand side, for example, the winner of token issuing Securitize is one of the leading token issuing technology solution provider in the industry. And also, for example, Ledger, winner of the digital custodian solution from last year. They are definitely one of the market leader in this space. And I think recently they just announced closing of a funding round of 380 million and make them a $1.5 billion unicorn today. So these are all very high quality companies and projects. And we are very thankful to have them to join our awards last year. So this year, we certainly also anticipate a lot of good nominations coming in. We already started now. The nomination will run until end of September. We will have the same structure as you can see on the left-hand side, Best of Class TADS Awards going to the asset issuer, and also on the right-hand side, Ecosystem Excellence Awards category going to the solution provider. But we do also have some new elements. For example, in both categories, as you can see, on the token side, we add the NFT tokens for this year. There's a lot to talk about NFT. and also on the right-hand side, the NFT platform. But I want to clarify the NFT that we focus on are the NFT STO, right? Because they are a lot of the NFT, they are not considered as securities, right? They're trading as utility tokens, but some of them, they actually carry some characteristic of security tokens, like, you know, distributing and dividends or profit. And I will leave more of the discussion to the later of the panel. I think that's something we can talk about as well. And in addition to that, we also add the rising star category for both categories to reward the up and coming companies. As you can imagine, the two award categories are very different. So we also have very different judging criteria as well for each of the awards category. You can find the details on the website. They're all very different, except there's only one judging criteria is common for the two category, is on the compliance, right? Because tokenized asset and digitized securities is a regulated area, and we do think both on the token side or even the solution side have to be compliant in the framework. So this year, as I mentioned, the nomination have started, and it will run until end of September. We are planning to announce the result in early November, and hopefully we can host an award ceremony if things are possible. If not, then we'll still have a hybrid event like we had last year, where we will still have a venue to invite guests, award presenter to go on stage to announce the result and film it and broadcast it globally. And also this year, this award ceremony, we will already reach agreement with the Hong Kong FinTech Week. We will be one of their side events during the Hong Kong FinTech Week. These are some of the committees. You can also find them on our website. We have different committees, the steering committee, organization committee, and we have a separate award and vetting committee for the best of class awards category. As you can imagine, it also takes a very different backgrounds and professional to judge the two categories. So another committee for the ecosystem excellency award categories. And also we have to thank you for all our strategic partners. TADS Awards won't be possible without their support. We are very thankful to have support from many major organizations in the industry. And this year we also have a new category of partners called the regulated exchange partners. As different jurisdiction started more or less the sandbox program in 2018, 2019. And now we see in different countries, the candidates from the sandbox are all graduating one by one, right? So this year we see a lot of regulated exchange coming to life. I will see this list will definitely be growing much faster. And also thank you for our media partners globally. We have very thankful for the effort of our media partner. We got very good coverage globally on the media. This is the timeline. As you can see now, we are hosting an expert discussion panel. Thank you for the great support from our committee members and partners. So we are hosting 7 panels, all with different topics, while we are running the nomination. So in end of September, we will close the nomination and start the vetting and judging process in October, and aiming to arrive for the awards result in end of October, so that we can host an award ceremony in early November for official announcement of the results to the public. I think that's all. So if you have any question, please reach out to us through the TADS Awards website. We have different ways to be contacted. So And also, if you're interested about the award, we're looking forward to receive your nomination. Thank you.
Yeah, thank you so much, Sam. So now I would like to introduce our panelists. First, I would like to introduce our moderators, Simon Chan, COO from Heyoko Brothers, and then following by the panelists, Rika Kudayan, ESG funding partners from KS Pet Law, Hayden Lau, Senior Legal Counsel from the Hong Kong Jockey Club, Martin Savai, Chairman at the Somali Capital, and Frankie Tam, Counsel from FSL Sutherland. Now we'll pass the time to you, Simon.
Thank you, Camille. Thank you, Sam. And thank you, all the panel speakers and the audience. You can hear me clearly, okay? Sorry, yeah?
Yes, perfect.
Okay. Now, let me introduce myself using 1 minute, and then I will basically lay out some of the framework so that this panel can get the most out of our discussions as much as possible. I will have several general questions for everyone, and then a dedicated questions for each of the panelists here. So bear with me if the question seems to be not really that relevant, then we can change. You can change the subject. So let me introduce myself. I'm Simon Chan, working for Heyoko Brothers as the COO. This year marks the 29th year I've been in the asset management industry. I'm always on the buy side, focusing on quantitative strategies and technology investments. So by quantitative strategies, basically, I was one of the first ones to launch index funds in Hong Kong and Asia. When the market first opened in Taiwan and India back then in 93, 94. So those were even before the tracker fund or index fund or ETFs that are popular in Asia region or globally or in Hong Kong. So technology investments, I also launched one of the first Asian technology fund in 1999. There were only 5 back then. So basically that was the time internet was the fashion or the sector to invest for everyone. So I was using 3C as the hypothesis to invest: connectivity, content, and finally commerce. So 20 years later, we finally reached the commerce part, which I call them the end of Web 2.0. The new thesis is, of course, after 2, you have Web 3.0. So 3.0 is going to replace, in my opinion, 2.0. To start off with, of course, it's still a fashion. And the keyword, of course, is token, is a fashion. But if you look at every technology, it started off as a fashion, and then with wide adoption, and then a lot of ups and downs, and then finally becomes standard, and finally replaces the old ones. So I guess that it always starts like that anyway. So token will be one of the keywords we'll be referring to, but what exactly is tokens? I would like to hear from the panelists as well. I mean, in your definition, in your jurisdiction, in your industry, how do you actually define it? Because we are talking about regulations. So fast forwarding, I think Web 3.0 is possible because of the creation of tokens and because of the technology called blockchain. So we also need to understand both, which is very different from what we have so far. The early phenomenon is already with us. We have the cryptocurrencies, we have DeFi, we have NFT, we have STO, we have whatnot. So it's already here, a lot of names. So right now, I think it's time for us to really come down to a few things, which is one of the purposes of this panel may not be finding all the answers, but finding out what are the right questions to ask. So that, I mean, we can actually relate that to the industry, relate that to the regulators, and relate that, I mean, to all the participants. So, as I said, that the common denominator happens to be the term called token, and it is the same thing defined broadly that drives 3 things that did not exist in the internet as of today. And this is these 3 things that can move us from Web 2 to Web 3. And these 3 things are quote unquote things are: 1, I believe is the internet ID, Internet of ID. 2 is Internet money or the Internet of money. 3 is Internet trust or the Internet of trust. So I believe that blockchain technology together with some other technologies can create something in the form called vaguely tokens that can represent these 3 things on the internet that did not exist before. And because if it is possible with ID, money, and trust flowing on the internet, I think this is going to be really, really a completely different technology landscape. And together with that, of course, is a completely different regulatory landscape. So this is where they got me interested in this topic, and that's why I volunteer to be a moderator of this panel. So so much for the introduction on myself. Now, I would pose the general questions to each of you, and then I expect, each of you to spend a little time to introduce yourself, and then trying to answer my first question. But the first question is a warm-up question, so it will be very simple. I will start off with the sequence I see on screen. So it's Hayden, Martin, Rika, and then Frankie. Now, my question is this. Describe in 3 words or less about the regulatory landscape in tokenized assets and digitized securities. So warm-up questions, no more than 3 words. How would you describe, what that is? Where are we today? So can I start with you, Hayden?
Sure. So I should first give a brief introduction about myself, right?
Yes.
Okay, so well, thanks everyone for having me. My name is Hayden. I am a senior legal counsel with the Hong Kong Jockey Club. I provide legal support to my employer in terms of technology, commercial, and also the club's investment activities. So previous to that, I was the head of legal for Sarai. It's a tech platform company owned by HSBC. And previous to that, I was a private practice lawyer advising on tech and and fintech and other sort of interesting emerging legal matters. So thanks again for having me. So the 3 words that I would use to describe, I guess, Simon, you call it crypto regulations today, right? So I think the first word that I want to use is centralized. We've got a decentralized sort of paradigm, but I think our regulations are very much focused on the sort of centralization, regulating intermediaries or this sort of centralized regime. So I think also the second word is patchwork. That we don't really have a holistic regime. We're relying a number of patchworks. And I'll probably just use 2 at this point. Thank you.
Great. Centralized and patchwork.
Yeah.
Excellent. Martin?
Good evening, everybody. My name is Martin Sabine. I came to Hong Kong about 40 years ago. Now worked for Hong Kong Bank for 5-6 years before setting up Summerlee. Summerlee is now a listed company itself, and it's a traditional financial services group in Hong Kong in corporate finance, does advisory work on the merger and acquisition space, and also listing rules transactions where advice is required. We also do IPOs and follow-on issues. So basically what we're looking to is see if we can expand our remit to raising money for our clients and contacts by STOs, but we're firmly in the licensed sector. So we have, in our group, we have licenses 1, that's where the STO activity is concentrated, 6, which is corporate finance and a fund management subsidiary with licenses 9 and 4. So we really have to be committed to a regulatory approach. And I think that's why I was very interested in this panel and hearing different views. 3 words, well, I think if I can have 4, I'll just run them all together, running to catch up. I think it's interesting in today's Financial Times, Afghanistan has been driven off the front page by alarm over crypto platforms. And it gets a mention in the Lex column too. So I think the regulators here and elsewhere are waking up to what's happening, but are they ahead of the game or behind the game? I think they're still running to catch up.
So your 4 words will be running to catch up, behind the curve.
They're probably still behind the curve, yes.
Okay, behind the curve. And Rika?
Yes, thank you, Simon, for moderating and for very interesting first question. I'll just say a few words about myself. I'm an attorney based in New York. I do have to say that whatever we share here is not legal advice. I'm the founding partner of KS Tech Law. We are a boutique emerging tech practice focusing primarily on blockchain. We work a lot on the issuer side, on the investor side. We work with projects that are building product in the blockchain space, might be raising capital in the blockchain space. At the same time, we do quite a bit of work and consulting with core businesses that are looking to integrate blockchain into their operations. So a lot, we've been in the space since, and specifically in the tokenization and security space since what I call ground zero. It was the first DAO report issued by the SEC. A lot of my work is regulatory compliance and specifically US securities regulations. So when you've asked how would we describe regulatory landscape these days, the first thought that popped into my mind was where? It really depends on geography. And I think it's one of the biggest really sort of roadblocks in the space is that the regulatory frameworks are very siloed and very country specific, while these assets are meant to be traded seamlessly globally. So my first word is that it's very country specific and siloed, which is not a good thing. Because of that, it's very ambiguous, but it's fast moving. There are a lot of changes happening all over the world. So regulators are playing catch up with the industry, and we're playing catch up with the regulators, trying to stay up to date on all the things that are changing constantly.
Excellent. In fact, originally the question was using 3 words or less to describe the Hong Kong regulatory landscape, and then realizing that you're from New York, so I removed the word Hong Kong. But thank you. So you actually put out 4 or 5 words. So siloed, ambiguous, but fast moving and catching up, right?
Yes.
Excellent. Frankie?
So I'm a technology lawyer with Everett and Sutherland. Tokenization and technology work has been core to my personal practice and the firm's focus. So it's really interesting to meet fellow lawyers and our various experts from different fields here. If I may describe in 3 words, I think I'll take a slightly differing views from Rika. I see that Rika is saying it's a bit siloed and confusing. I guess as from my personal point of view, it's more about comparing the timeline. As like, if we compare to perhaps 3 years ago, the regulations, I think in Hong Kong at least, it will be more improved clarity. So I can't, as Rika's pointed out, I can't say for other jurisdictions, but I think I'm quite positive generally, and look forward to further discussion in this coming panel.
Great. So it will be improved clarity.
Yeah.
Great. Well, it's good. I mean, the warm-up questions have diverse views on the regulatory framework, which will be a very good starting point. Before I turn on to the next question, let me share with you my 3 words. It's I don't know. right? I just don't know the regulatory landscape good enough. That's why I'm a moderator here to try to get some answers. But as I mentioned before, the key thing is that can we find out what the right questions to ask rather than we are able to give all the answers, because at the end of the day, right, we may not be able to decide what the regulations or timeline may be, but we may be able to ask them. This is something that I encourage everyone to do. Given the time, I would now go for the specific questions addressing to each of you instead of more general questions. If I have time, I will come back. Can I start with you, Hayden? I think in one of the early feedback from you is that for this asset class, I mean, if you talk tokens or technology, blockchain, it is meant to be quite decentralized. You can imagine, right? Because you said it's very centralized. So I imagine that you believe that it can be more decentralized, more retail, more participation. But then it brings the issue of how do you encourage participation at the same time trying to protect them, right? Now, my general question is, of course, I mean, what's the view on that? But within which I have one additional question, which is, what are we protecting them from? Or from whom or from what, right? So I think that may have some different perspectives if you look at, I mean, this technology. So I think I'll give the time for you, Hayden.
Sure. Thank you, Simon. I think to answer that question properly, we should probably enumerate or come up with a list of risks that the regulations aim to protect, you know, the investors or participants in the market from, right? So I think certainly very high on the regulators list would be fraud, you know, prevention of fraud. I think that's, you know, an important thing. Financial crime, you know, in particular, AML, well, anti-money laundering and counter-terrorist financing, be one of the key financial crimes that you know the regulators would like to tackle, and we've got a very recent FATF set of recommendations, you know, sort of fast forwarding the agenda in this respect. I think cybersecurity as well. You know, we've had, you know, and you know, especially in the DeFi space, you know, currently, I mean, you know, there has been, you know, certain, you know, counterparty risks, including, you know, hacks and frauds and things like that. So, well, I mean, it's not too different, even in the centralized space where you know, we've had crypto exchanges that got hacked, you know, in the past, right? So cybersecurity is certainly a big thing. I think, you know, when I say centralized, I see the regulators focusing a lot on, you know, especially in Hong Kong, entities conducting sort of crypto related activities, right? So a lot, you know, the SFC typically regulates intermediaries, right? So that's very much a centralized view. You know, you rely, you know, there's like a centralized, you know, sort of point of activities, and you rely on the intermediaries to sort of help, you know, whether distributions or other type of activities. So when you adopt that view, I guess there are these sort of protecting against sort of improper conducts, if you will. You know, things like risk of mis-selling, you know, and things like perhaps market abuse activities, like, you know, pumping, for example, right? So that might be one. And I think volatility, you know, for you know, for these sort of type of assets, right? Also, you know, I think, you know, high, well, you know, impose risks, and also, I guess, just the fact that a lot of the market participants, token issuers, if you will, are quite new companies or entities, so the risk of them failing altogether, right? So I think these are all the kind of, you know, risks that I think the regulators like to deal with. So I think top on my, you know, in terms of you know, I think the key trends that I see is that the regulators obviously try to tackle those, but I think top on the list would be, you know, risk management in terms of AML, CTF, and cybersecurity. And I think especially in Hong Kong, the direction has been, if I call it retail investor protection, So if you look at the existing regulations in terms of regulations imposed on portfolio manager, distributors, or exchanges, I think the one of the first things that comes to mind would be that once you fall within the regulations, you're only supposed to provide, the entity or the service provider should only provide, their offerings or their product services to professional investors. So I mean that seems to be the trend in Hong Kong. So I think it's again, right? I think it works if we are looking at the prevailing landscape where we do have a few bigger exchanges, but I don't think, whether you think of it as a loophole or, just sort of mismatch of our regulatory landscape altogether, I don't see that our regulations would work in a sort of a decentralized sort of manner. For example, if we're looking at these DEX, decentralized exchanges, it's essentially peer-to-peer sort of transaction, buying, selling of tokens. I think they pretty much fall outside of the regulatory landscape currently. Similarly, if you look at DeFi products, they are not really captured by the current regs, at least not in Hong Kong. And if you look at things like Uniswap, they have this sort of automatic market making mechanisms, right? So I mentioned earlier there's certain conduct requirements. You're not supposed to, for example, these exchanges, for example, that once they fall within the regulations, they're not supposed to do prop trading, or they shouldn't do market making activities, in a proprietary sense, right? So, but that works, if you have a centralized exchange. But what about, a construct like Uniswap, where you've got this sort of automatic market, algorithmic or computer driven or algorithm driven sort of market making activities? Then I think, again, it's something that not, our current regulations do not capture it at all. So I think we're still in the very early days. Even though the blockchain, promotes a paradigm of, zero trust and complete, sort of decentralized, I mean, that's supposed to be a holy grail. I think, to a certain extent, we still rely on a hybrid of central decentralized model. And yet, our regulations are yet one step behind tackling probably just a centralized aspect of our whole ecosystem. So that's, why I describe our regulations as centralized and patchwork, and that it really just sort of address probably a low-hanging fruit for the regulators, but nevertheless it doesn't really address the entire ecosystem. Certainly not. It doesn't address where I think the industry where it wants to be going.
So thank you, Hayden. My takeaway on it is that you expect the regulatory landscape to sooner or later tackle the DEX and the DeFi space.
Well, I don't know how our regulations can seek to cover that space. You can certainly require service providers like a centralized exchange to impose KYC, AML, CTF requirements, do KYC on the customers before you're letting them on. But I mean, how do you impose the sort of requirements when you have a peer-to-peer transaction, when in fact, and when sometimes you can have complete be completely anonymous, perhaps just at a device-based level, just to trade bitcoins off your cold wallet, for example, right? So I think one day we need to attack that, but I certainly don't know how that might be possible. But I think it's a void that we have in our regulations now.
Good. Other panelists, you have anything to chip in and to share in your view? I want to share one of the perspectives that I have, which is the reason why I asked this question is that how to regulate peer-to-peer, it depends on what are they doing, right? Peer-to-peer. So if token is the unit that they deal with peer-to-peer, then do you regulate the peer, or you regulate the technology for the peer, or you regulate the token? If without regulations, there are laws, right? So you defraud me, I can sue you, right? It's only the thing that how do you prove, right? So you goes back to, I mean, the technology, your counterparty, etc., right? So I would think in this way is that, I mean, regulations are more specific, addressing the issues, the problems they believe they are facing or will happen. Otherwise, in general, right? I mean, we should believe that we are protected by some laws. It's just that it's not clear, because peer-to-peer transaction, if it's not a financial product, it's not common. And not common for regulations, I mean, but it's common for law protection, right? So if we are referring to that part of the regulations, this is why we're talking about, will there be a landscape that specifically address this type of peer-to-peer transaction through something new called token, enabled by a technology which is also new called blockchain, where risk, all the risks you define, right, may be defined differently and identified differently. So how do you define fraud within a peer-to-peer blockchain network, right? Whose fault? Fraud, is that the programmers or whatever, right? I guess I'm not asking for all the answers here. As I said that, I mean, this is a starting point.
But Simon, I actually, you know, you've inspired me a bit, and you know, and I invite Rika to chip in. So you remind me of a, you know, the concept of code as law. You know, a very famous Harvard Law School professor, Lawrence Lessig, and you know, he's an, you know, like old school tech lawyer, if you will, introducing the concept of East Coast and West Coast law. You know, West Coast as in, you know, in Washington D.C., the law, you know, enacted by Congress, and you know, basically, you know, government imposed law, whereas East Coast, Silicon Valley, you know, create code, but you know, it very much can regulate the activity online, and that might be our answer, I think. You know, perhaps, you know, as we have smart contracts and we can programmatically implement rules, you know, on the blockchain, perhaps, you know, the answer, you know, and if you inspired me, you know, to say, how do you, you know, implement these things? Do you regulate the participants, or, you know, if you embed these rules on the blockchain programmatically, right? So that's certainly one possibility, you know, if we can rely on technologies to solve, you know, the need to sort of de-risk the system in the decentralized sense. So code as law, and perhaps, you know, programming some of the boundaries and rules into the blockchain directly could very well be the answer, instead of having the government, you know, enact laws in our legislature.
Yeah,
I'll add, that's an interesting take on it. I'll add a few words on just decentralized systems and protocols, right? I take a very pragmatic view. Currently, I know where these projects are moving towards decentralization, but currently what we have today on our hands, and 99.9% of the projects, there is someone running this decentralized system. And there is usually a group of people, a very centralized management to most of the decentralized systems out there, right? Of course, it's not the case with Bitcoin. And then from there, you know, the level of decentralization starts trickling down. So there is someone there with a admin function, with a red button, right? However you want to call it, that can just unplug this decentralized system or protocol, which makes it really pretty centralized. So while we're moving towards true decentralization, I don't think the government would have a problem today to find whoever is managing the decentralized exchange currently, right? And then another point to make about, especially with decentralized systems, Hayden, you're absolutely correct that one of the biggest concerns that the government has is prevention of money laundering, right? So I have two views on this subject. On one hand, and it's been years now, and I used to quote this report everywhere, I think the UK Treasury, as early as 2018 or 19, issued this miles-long report where they looked at different mediums of exchange and instrumentalities and rated them as to how likely those are to be used for money laundering activities. And then they had a list with traditional banks at the top, and then you have different things like insurance company structures, trustees, accountants, lawyers, casinos. And the last item, the least likely instrumentality to be used for money laundering, was Bitcoin and cryptocurrency, because it's traceable and transparent. And but there is another side to it, right? There is another side to it as to how can we regulate decentralized systems, how can we regulate protocol. And even though I'm not a financial crimes lawyer, but the extent to which I understand it, if you provide instrumentality for money laundering, you're still going to be on the hook for financial crimes that are committed on the network. So there is a bit of, I think it's becoming, as people understand the technology, as regulators understand the technology, as we're more comfortable with this technology, as we're more comfortable with actually reading the blockchain, right? And tracking source of funds and tracking all the transactions on the blockchain. On our side of the world, IRS is particularly good at doing that. It becomes more obvious and apparent that these instruments are not very likely to be used for traditional money laundering. But then at the same time, even if it's a decentralized platform and it's not really up to the standards, I think today's regulators will not have a difficult time finding the managing group of people who are running the platform. That's a practical reality today.
Great. There was supposed to be a question for Rika on what have you learned from the US. You just answered that. Thank you very much. In fact, there was a general question surrounding these, which I did not ask, save for later, but it's already out there. It's called mathematical trust and human trust. Coded inside the program, mathematical trust, even though it's transparent, will people trust it? Or will the regulator trust them? I mean, of course, first understanding and then believing it works. I mean, so how do you know that it works or not? Of course, experimentation. And this is where I think that has to be done. I mean, you need to experiment in the scale in life. Otherwise, there's no way to find out if it works, right? Anyhow, I mean, in the interest of time, I will move on to my next question, which is for Martin. And thank you very much, Hayden and Rika. In terms of this new tokenized assets and digital securities, which your firm is also trying to promote or involve in your business, what do you think are the needed features from the regulatory point of view that will not kill the innovations, that will allow you to conduct business in an innovative way, but are not, I mean, they are not putting out obstacles to preventing you from doing innovative business?
Yeah, okay. That's a very good question, Simon. It's also rather a wide question, but I'll try and be reasonably brief. I think there's still a tension. I mean, if you look at the original boosters for the crypto world, if you like, there was an anarchic or libertarian streak there, which was probably a challenge to regulators, and I think they still see it as a challenge. So, you know, who needs fiat currencies if you've got Bitcoin and Ethereum? Who needs a banking system if you can do things through distributed ledgers? Who needs Facebook anymore? Maybe one of the founders of Coinbase was saying it'll be the end of these platforms because you can do it all yourself. From a regulatory point of view, I think it's quite alarming from them, because, you know, a regulator, and it was mentioned, I think, before by Hayden, they do rely on intermediaries because they license intermediaries, and they can, they can crack the whip, if you like, on intermediaries. Whereas I think they really don't think that they can very easily tackle people like Binance or some of the DeFi ones. Whether they even would like to regulate them is another question. Most of the regulators like to stick to some criterion, and in Hong Kong, of course, we've got the Securities and Futures Commission, so it's securities. Now, tokens, from our point of view, when we are looking at trying to raise money for clients, maybe a token against a real estate, or a token against flow of income from a contract. Those have always been acknowledged to be securities, and we have this rather strange situation where actually virtual asset exchanges wanted to be regulated, but until recently they couldn't be. They had at least to have an STO, one STO, then they could be regulated because they were handling an STO, which was a security, whereas actual being a virtual asset exchange, the SFC didn't want to call that a security. Now, we're changing. There's a change now because, as we mentioned, we've had this recent consultation under the auspices of the Financial Services and Treasury Bureau, which is quite interesting. So that's not the SFC. But clearly, virtual asset exchanges are going to be regulated now in a more conventional way, and they'll have to have a license. So I think the way it's going in Hong Kong is we'll have to look back at the traditional criteria, if you like, and concentrating on intermediaries. So are they adequately resourced? Can you apply the fit and proper criteria to them? Are their internal controls okay? If they keep custody of assets, that's something that the authorities will look very closely at. And then, I think, as mentioned as well, I mean, as well as the regulatory side, there's the consumer protection side. So I think it's very clear in Hong Kong, at least, it's going to be hard for authorities to accept in the near term that these services and products should be extended beyond professional investors. So that seemed very clear about that okay, there were a number of submissions made to them that this is interesting for retail, and there are huge volumes done internationally retailing, but for Hong Kong, at least to begin with, it's going to be limited to professional investors. So that's, broadly speaking, how I see it now. There's going to be an emphasis on the intermediaries playing a role, that the criteria for judging them will be pretty much as they have been judged in the past. And in terms of investor protection, it's going to be limited to professional investors only.
Great. I think this is also the reason why you use a behind the curve, right, to describe the current regulatory landscape. I always think that there are at least two tools the regulators in Hong Kong can use to regulate. Number one, of course, is license. Number two is, of course, tax. So the both of which in the current regime has been used extensively. So at the end of the day, right, without anything new, you can still apply. These two. The only thing is that whether you need to modify the definitions of whatever, for example, definition of token, but I think it's doable. So my view is that it can move very fast, but not necessarily in a way that we may like to see. But anyhow, Thank you. Finally, Frankie, this is a question which to me is not easy, but I will ask anyway. If you don't want to answer this question, I'll have that next one for you. For the regulatory landscape in Hong Kong, does it need to first consider what China is thinking, what mainland China is thinking? because they ban, I mean, mining, they launched their digital yuan at the same time. They don't allow decentralized exchange, but then they allow brokers to offer the service overseas. So, I mean, under this, right? So what do we need to think about them first in Hong Kong when the regulators want to have something here?
Thank you, Simon. I think the interesting thing when you mentioned China is that it also reminds me how the different parts of the world are tackling tokens law or regulatory requirements surrounding blockchain and the infrastructure very differently. So just now we discussed, so Simon, you and fellow panel discussed like what is the subject matter of regulations? If it is not financial instrument, why regulate it? And interestingly, Simon, you just mentioned China. Perhaps China is kind of like in a quite advanced in regulations in that it indeed, and it is currently regulating the infrastructure, which is the technology itself, even though the subject matter underlying may not be securities, which we are all fascinated by or seeing worldwide, like the different laws recognizing whether it's the type of securities. So it is setting an example that some countries actually regulated technology itself. In fact, it starts from early 2020. Anyone running a blockchain infrastructure will have to have certain recordals with the authority. So it is happening, but perhaps due to the unique background of the mainland Chinese regulations. So moving from that, Hong Kong, of course, is very different and tends to adopt a more technology neutral approach. But we do have different regulations besides the securities regulations that look at the nature of tokens, which is very vibrant. We all know. So one side of it perhaps is to look at whether it has a securities feature, and the other side, you just mentioned about tax as well. In fact, the Hong Kong Inland Revenue Department was very advanced, and back in, I think, last year, already recognized one of the guidelines that it can be a form of payment subject to salaries tax. So it's not just securities law that actually regulate the subject matter. It can be related to taxation, and perhaps even for payments, we know that, do you recognize it's a form of money? It can be as well. It is such. I think worldwide we're seeing, for example, the likes of big international payment companies offering services, taking tokens as a kind of payment. Payment regulations may be relevant as well. So I think it is a vibrant landscape, and it is all like law is actually recognizing how vibrant and diversified the nature of a token is, and in that, whether Hong Kong is taking reference from China, I think Hong Kong as an international city, we're actually taking reference from all around the world on different aspects on whether to regulate technology, to regulate the subject matter, AML, or is it a payment, or is it security? So I think Hong Kong is in a very interesting position to adopt and borrow reference from worldwide.
Excellent. There are a few takeaways from me, which are leading to some new questions. I don't know how much time we have, but anyhow, I will ask them. First is about, I mean, is there a concept of cross-border in terms of technology? You talk about infrastructure. I mean, it's China infrastructure, but not global infrastructure, or maybe it is, right? Secondly, is that, I mean, cross-border definitely has still been quite confusing in the current, I mean, regulatory regime when we talk about data. Now, if we add something called token, so how is it going to be reconciled, right? Is token data or is token not, or is it both, right? Anyhow, given the fact that we only have 2 minutes, I will ask one more general questions. After this discussions, are you going to add or change any of the 3 or less words you mentioned in the beginning of the session? So Hayden?
I think what I might need to add, which I forgot to say at the beginning, is a disclaimer that my view, what I said today are my own views and they don't represent that of my employer. So, you know, I don't think I will change my 2 words, but I think, you know, I'll probably concur with my fellow panelists' description or use the word behind. I think, you know, I feel that we're more behind after this discussion.
Okay, Rika?
Yes, I think I wouldn't change my 3 words, but I want to add context to it because I focused mostly on issues with current regulatory landscape, but overall I have this not very popular view that, at least on the US side, I'm quite surprised as how gentle the Securities and Exchange Commission and understanding have been in regulating the space. Given the amount of fraud on the market and all the things that were happening, they're very curious, they want to learn. Their goal is not to regulate the issuers, but to protect the retail investors and make sure there are adequate disclosures to the investors. So I'm still of the view that it's very country specific and siloed, which prevents this market from growing. It's still ambiguous, but that's also because of regulatory differences country by country, and it's fast moving. I just wanted to add context to my characterization.
Excellent. Martin?
I think the word silo is an interesting one. It sums up an awful lot of things. It's a sort of complex type of concept in a way. So I think that sticks with me. So I'd like to add that. I think maybe Frank, we've been a bit negative, maybe. I mean, the vibrancy, the fast-moving nature. I think I, would like to be a bit more positive after hearing what everyone's been saying.
Yes, we all need that, right? And Frankie?
Well, I think the law changes fast, and I move on with my 3 words from improved clarity to, I think I'll stick with KYC for the ease of remembrance. But instead of know your client, it's know your coin, because how vibrant and interesting the token or coin can be, we determine the regulatory rules corresponding in that subject matter. So I think going forward about any regulations is really KYC, know the coin, know your coin.
Excellent. I think some new terminologies will be good for us to address the questions more directly and easier. As I mentioned, the key thing is that what the right questions to ask. Is it know your client or know your coin? I also want to add to Martin's comment. Professional investors or accredited investors, maybe we will change that into a professional peer, right? I mean, they are not really investing. Maybe they are just exchanging, right? Anyhow, I think thank you everyone to join these panels, and I have got a lot of inputs from you, which is quite inspiring. Just a little bit of summary to close this panel session. First of all, I think silo is definitely something is clear. And secondly, while I started off with being interested in the Hong Kong regulatory landscape, I think every country will learn very fast from each other and try to see what is possible or what is useful. In the local context. But the common denominator, I still think that is something called a token, which I think we need to define it better. Because if the token is the major unit to look at, it may change everything that we are talking about here. Do you license tokens? Or do you license the people of a company behind the issuer of a token? Anyhow, I don't have the answers, but that will be something we may be able to discuss in another panel. So enjoy the time very much, and thank you very much, everyone. I'll pass on the time to the organizer. If they don't, then I will close the session here. Camille?
Yes. Okay, thank you so much, Simon, and then to all the panelists. Thank you for the extremely insightful discussion and sharing your free works. So the recording of these sections will be available on the TADS website in a week from now. And thank you for all of you joining us tonight. And please feel free to register the other 4 sections on the screen you can see by scanning the upper top corner QR code. Enjoy the rest of your evening, and thanks for all of your effort. Hope to see you in the next sections. Thanks all. Thank you.
Thank you, everyone. Bye.
Thank you. Bye-bye.
Thank you. Thank you, everyone. Good night. Have a good day.
Bye.
Good evening. Bye-bye.
Good day. Good evening.
Thank you.
Bye.
Thank you.